So the UK housing market isn't looking too promising right now. With interest rates rising and house prices at all-time highs, it's fair to say that investment properties are also going to be a lot harder to find, fund and manage. Heck, we may even see 6% interest rates on the cards, making life difficult for all of us. However, despite all of this and the fact that it may take longer to build up enough cash to go on to purchase an investment property, there will always be opportunities out there. And one rule we all need to be aware of is that you make your money when you purchase property. And today, my friends, we will look at 3 areas in the UK that could still provide you great returns and prove to be worthwhile investments. And I'll even throw in some reasons why. So with that said and done, let's take a deep dive into lots of data, look beyond the headlines and explore the best buy-to-let areas for this year. Nottingham has been doing very well over the last 2 to 3 years and it's becoming more of an attractive area. As things stand, the employment rate is around 75% in Nottingham, and early this year, the university was the second most targeted university for graduate employment by the Times Top 100 companies. Now, in terms of its properties, there's a variety of houses, with options available in the city centre or in more rural areas 15 minutes outside of the town. There's also significant regeneration initiatives, including the 50 million Beeston Square redevelopment in Beeston itself, consisting of 132 new houses, a movie theatre, restaurants, and a bar. Alongside this, Nottingham's 650 million Island Quarter, the city's largest redevelopment project in decades, also received planning clearance too. Now, I think Nottingham still has a long way to go, but seeing these huge investments poured into their city, which also boasts great transportation links to London and throughout the country, is not a bad shout. And the average property price over the last year, according to Rightmove, was £234,274, and yields have been seen up to 6%. Next up, we have Manchester, who we could say is now leading the north, and I don't just mean in football terms. It is the second best metropolis after London, and its current expansion and prosperity is outstanding. I do strongly feel that property values in Manchester will continue to grow over the next 30 to 40 years, and those that get in now could find themselves pretty well off from a capital appreciation alone in the distant future. Now, Manchester isn't quite your London, but it does boast lovely Victorian homes that within 15 minutes or less from the city centre. It has also seen a whopping 378.96% growth in property prices between 2001 and 2021. That's not bad going. Similar to Nottingham, Manchester has 2 excellent universities, excellent employers, and a variety of successful property strategies, including straightforward buy-to-lets, HMOs for students and young professionals, and even serviced accommodation for visitors, tourists, and events that require people to stay for 1 or more nights in and around the city. Manchester, in the long run, even if we was to wobble in the market over the next few years, has enough about it, in my opinion, to bounce back, and I think it'll be one of the great performers of the next 30 years. And finally, on Manchester, the average house prices are £248,174, and the yields have been reported to be just under 8% at 7.93%. And finally, we have Liverpool, which has developed into a property hotspot over the past few years, with property prices remaining quite affordable compared to the rest of the country. Investors and buyers are looking to buy the typical Liverpool terraced house to either keep as a buy-to-let or convert into a HMO. Ultimately, the demand is driven up prices, so it'll be interesting to see how this keeps going. The transportation system is strong, with connections to Manchester, Leeds, Sheffield, London, Nottingham, Birmingham, and many other significant UK cities. Similar to Manchester and Nottingham, Liverpool is receiving millions of pounds of investment, which can only be a positive thing. One of the largest regeneration projects in Liverpool waters is a £5.5 billion investment in the city that aims to build luxury apartments, high-rise structures and recreational facilities. All told, this will entail the construction of 5 entire neighbourhoods in the area of the disused docks where the development is planned. Now, you can assume that the land nearby will be more valuable in a few years. This will increase its appeal and enhance the neighbourhood by attracting new residents and businesses into that area. Could it be a smart move to take a punt on Liverpool now? Perhaps. Its top areas boast yields above 6% and its house prices on average are below the £200,000 mark. They are in fact £191,234 according to recent Rightmove data. So there you have it, my friends. Let me know if I've missed anything. Thanks for watching.